Hey, welcome back. Glad to have you here. Let's dive straight into the latest economic developments shaping the Korean market today. We're starting with a significant move from the South Korean government regarding the Corporate Value Up program. According to the Ministry of Economy and Finance, the government is planning to offer inheritance tax benefits to companies that voluntarily disclose plans to improve their corporate value. Specifically, for companies that increase shareholder returns, like dividends or stock cancellations, the government plans to reduce the inheritance tax burden on controlling shareholders. This is a strategic push to encourage Korean firms to address the so-called Korea discount by making the business environment more investor-friendly. Speaking of investors, Deputy Prime Minister and Minister of Economy and Finance Choi Sang-mok recently reaffirmed the government's stance on abolishing the financial investment income tax. Minister Choi emphasized that this isn't about tax cuts for the rich, but rather protecting the 14 million individual investors in Korea. By removing the uncertainty of this tax, which was originally scheduled for 2025, the government aims to support the stability and growth of the domestic stock market. Now, looking at the real estate sector, we're seeing some movement in Seoul. According to data from the Seoul Metropolitan Government and the Korea Real Estate Board, apartment transaction volume in Seoul has reached its highest level in 3 years. This surge is largely driven by expectations of future interest rate cuts. In May, transactions exceeded 5,000 cases, a level not seen since May 2021. Listeners should note that while prices are stabilizing in some areas, the demand in preferred districts like Gangnam and Yongsan remains quite firm. Finally, there's a notable shift in how Korean corporations are managing their global supply chains. A recent report from the Korea Chamber of Commerce and Industry shows that Korean firms are increasingly diversifying their investments away from China, focusing instead on India and Vietnam. The primary drivers here are rising labor costs in China and escalating geopolitical risks. In fact, investment in India by Korean companies has seen a steady upward trend as they look to tap into the country's vast domestic market and its role as a new global manufacturing hub. That's all for today's deep dive. We'll be back with more insights. You've been listening to the Korea Economy Brief, straight from the front page of Seoul Economic Daily. Thanks for tuning in.